And Matt Maley is the chief market strategist at capital market firm Maley, Tabak and Co. So, Matt, how would you describe the new deal reached by the House of Representatives?
Yeah, it was, as John had said, it was a bit of a surprise that it passed by such a wide margin. People were really thinking it could be, something to be a lot closer, and that anything above 300 would be a huge victory. And so it's going to be hard for the Senate to turn this down after such a big passing by so much. I mean, the people don't want to be seen as the people in the Senate don't want to be seen as the reason that this thing completely locked down. It would be if we default on our debt, that would be just a complete disaster. And just because they're just being a little stubborn on this issue, it's a lot different than just raising the debt ceiling is one issue. When you're talking about other issues later on, they can fight a little bit harder on. I'd be surprised if we don't get this thing passed by the end of the weekend.
So by the end of the weekend, what is your opinion on the chances of passing, and what will happen next after that?
Well, again, I think the odds are 80% or higher that it will pass. I just think the downside politically is too much for the Senate, especially the Republicans, if the thing doesn't pass. And it's just, in their little constituency, it might help. But in a broader picture, they can fight that battle later. On a broader picture, if they default, that's just going to be too much of a problem, I believe. Now, what does it mean going forward? I just think that it's going to actually enable the market participants to kind of shift their focus back to what's really going on with the economy. And that may actually, even though this thing will be pushed behind us, the market never went down or any kind of fear over this, any default taking place. So it's going to be hard for it to rally a lot more as people focus on the economy.
Matt, what has been the dividing line between Republicans and Democrats?
Well, I mean, the big thing is this whole situation with, spending more or not. And when you're moving into a recessionary environment, especially after a lot of the blame for what happened, with this whole issue with inflation, was the excess spending that we did during the pandemic. Maybe we did too much. And so for, the Republicans, they feel a little bit more emboldened to really push back on that spending. And they seem to have come out looking a little bit better. They seem to gain more than the Democrats did. Each side gave in a little bit, but I think the Republicans got a little bit more out of this.
And Matt, why is reaching a deal on the U.S. debt ceiling crucial for both the United States and the global economy?
Well, I mean, if they default, it just raises all sorts of lending. Interest rates would shoot up, increase the level of the costs of debt, and we're a society in a world that really runs on debt. I'm sorry to say. In fact, it's getting too much. But the one thing I worry about is that as we move past this issue, when people start focusing more on the U.S. economy, and we're seeing a less robust growth out of China, but we're still everybody's taking their eye off the ball when it comes to the banking crisis. This is going to cause credit to contract in the U.S., and that in turn is going to cause the economy to slow, I believe, in the second half of the year. And with the market as expensive as it is, even though we've moved past this debt ceiling issue, it could still cause some headwinds as we move through the summer.
Thank you very much for your insight. That is Matt Maley, Chief Market Strategist at Maley, Tabak and Co.